Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
Just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, welcome everybody to our second day of building blockchains. Welcome to the show. We had a great show yesterday, some really great feedback, and it's day number 2. This is awesome. And our plan is to be continuing every day at the same time, 2 o'clock Eastern time, 1 o'clock Central time, which is where I'm at. It's God's time zone. And of course, noon if you're in the mountains, 11 on the West Coast. So wherever you're joining from today, why don't you give me a little chat in the chat and let me know where you're coming in from, and we'll get the party started. And you can share with your friends and your family members, because the way that we, get the algorithm working, so we, have some great momentum here, is to share with people and to have more viewers. So if you haven't done so already, obviously like and subscribe. I totally forgot to tell you guys to do that yesterday. But like and subscribe and follow if you're over on Rumble. We had a great crowd on Rumble yesterday. I think we got everything working today technology-wise, which is great. Hopefully everything is working. Sean is coming to us from Missouri. Let's see if I can share this. So it's not as, let's see. There it is. No, that didn't come in. Well, I don't see Sean's text in here, his message. So maybe it's not going to work, but hey, the idea was great. It's supposed to share the chat. It worked last night. What can I say? Didn't work today. Well, maybe technology is not as perfect as I thought it would be. We'll keep working on it, see if we can't figure it out. Anyway, today we're getting into more of building blockchains. I'm going to actually break down what goes into a blockchain. Where does this name come from? I remember whenever I was first learning crypto, there was just so much new language, so much new vocabulary, and I found it overwhelming. And trying to keep up with it all and track it all, it just became so overwhelming for me. And, once you understood it, it's kind of like, oh, that's obvious. Like, it really is simple. That is the truth. Crypto is simple. It's so similar to what we've known for years with trading stocks and options and futures. And it's so similar. And yet, because we're humans and it's new, anytime there's something that's new that we're not comfortable with, we tend to make it complicated. So we're going to try to de-simplify some of that tonight and today. I forget it's the afternoon. Normally I do these things at night. And we're going to try to make it simpler today and see if we can't get to the other side. Before we get there, we're going to do a little bit of market analysis and take a look at what's going on. So you should be seeing my screen here. And if you're seeing my screen, you should be seeing Bitcoin, the infamous Bitcoin, the one that started it all, right? Yesterday we talked about it. We put these lines on the chart. I referred to this top. Oops, that's the wrong one. Let's try clearing that one out and do this one instead. I referred to this one up here as the resistance. And whenever you have a trade, in this case it's Bitcoin, that's running up into a price point, and it does it over and over again, it finds a price resistance. And this is where the sellers show up, and they continue to show up over and over again. And it becomes like a wall. Think about it. If you keep running into a wall, what happens? You bounce back. You run into it, you bounce back. You run into it, bounce back. Well, just imagine instead of being a wall that it's a floor and a ceiling. And in this case, it would be the ceiling. And then eventually you break through. And when you break through, that becomes the new floor. And we'll call that floor a support. And we're finding that support right now on Bitcoin right around $100,000. So people are freaking out. We're going to look at a couple of headlines here in just a moment about, why is Bitcoin down so much? Why is it that crypto's crashing? Is the run over? Is alt season never going to happen? All these things are just hype. Nobody said we had to have an alt season. Nobody would say we had to have any of this stuff that people expect. This is just hype. And because you've heard people talk about it on social media, you might think, oh, this is the stuff that we should expect. Here's what we should expect: predictable price action and predictable market behavior. That's what we should expect. And what we're seeing right now is exactly what we should expect. Predictable. I'm pushing the wrong button. Why is it doing this? See, no, cancel that. No. Oh, that's why. I'm pushing the wrong button. What we're seeing is predictable price action bouncing off of resistance and selling off into support, and we're finding buying pressure at support. Okay, so I think it's completely normal. I think it's completely healthy. And we're seeing that pretty much across crypto. Now, you're looking at Ethereum right now. We're finding that same support here. We're looking at XRP finding support around $2.10. Nothing's changed. Nothing's changed at all. XLM finding that support level here around 25 cents, 26 cents. And Solana is finding that major support right around $155, which is a great price for Solana. It is a project, I believe in all these, but it's a project I believe a lot in. And I think the chance to get into Solana at 150, 160 is a pretty good deal. One of the things I want to talk about, I guess that's it. As far as analysis is concerned, that's all I got to share with you today. We're not going to get into what's happening in the stock market, although the market, I guess I am. I can't help it. Stock market sold off much heavier this morning, and it's kind of back up a little bit. We're showing we're down 166, but that's off of the lows substantially by a couple hundred points. Sticking with crypto, it's hard for me to stick with one market sometimes. One of the things I want to talk about, I want to move into our news segment and share a couple of headlines with you. And I'm going to tie it into these irrational swings and price expectations that we see in the world of crypto all the time. And so where I want to start is I want to come over here and share a headline that I meant to share yesterday, and I don't know how I skipped it, but once I realized I skipped it, I was like, well, I got to share that one tomorrow. Well, now it's tomorrow, so I'm going to share it. The headline is, this is on Yahoo Finance, but it went out everywhere because Motley Fool put out a thing about this. By the way, the key is in their name, Fool. Okay? They're not the greatest, and they're a media outlet. All they care about is eyeballs. It's not about giving you authentic information. But with that said, look at the headline. Is XRP approaching a death cross? Now, how many of you have been trading XRP? You've bought some XRP, you're holding it. Some of you have been hodling it for years. If you're an XRP holder, go ahead and say something in the chat and say, I'm an XRP holder, or just call yourself what you are. You're a hodler, right? You're holding on for dear life. So when you see a headline like this, is XRP approaching a death cross, what does it stimulate in you? It stimulates the idea that, oh crap, something bad could be happening. Logical. We come down to the headlines of the article, key points. Recent valuation, we're going to talk about that today, valuation. Recent valuation trends suggest that XRP's token price could enter into a death cross pattern. I feel like we should have sound effects with these texts because they're so ominous. Entering a death cross pattern can be an indication that more sell-offs are on the way, while technical pattern analysis can be used as a forecasting tool. Other factors will shape XRP's token price. Translation, we haven't got a clue what we're talking about. That's what they're really saying. But let's decode this, because death cross, this is actually something that gets a lot of headlines. It gets a lot of people talking about it. It always freaks people out. And let me explain it to you. So we're going to come over to XRP. We're going to talk about it. First thing I want to do is I want to introduce you to a concept. And I realize that this crowd is pretty new to me. So I'm going to go through a bunch of basic concepts kind of early in our live streams. And then as we get a little later, we'll just have an archive of videos that people can go back to. But early on, I want to introduce you to some concepts. So the first one I want to introduce you to is a tool that we refer to as a moving average. So I'm just going to come in here. I use a software called TradingView, and we're going to come in here and add in a moving average. What this average does, we're going to put 50 in here for the time frame, and I'm going to edit it so that it looks a little bit bigger for us. And what this does, make it a big yellow line, is it averages the price of an asset over time. In this case, it's a 50-period moving average because that's what I set the settings at. And that means that this yellow line is averaging the price of XRP over a 50-day period. So when you look at this yellow line, this is the average price that XRP is traded at, about $2.55 for the last 50 days. Now, if you go backwards, you're going to see that, well, a few days ago it was higher, and a few days before that it was higher. Why is that? Because as the price drops, the average drops. And as the price rises, the average rises. Okay? So you're seeing right now that XRP, the price action of XRP, is below the 50-day moving average. What's a death cross? So glad you asked. A death cross is whenever we take two of these moving averages, and specifically it's a 50-day on a daily chart and a 200 period on a daily chart. When you take those two averages and you put them on a chart together and you get a cross, that is considered the death cross. So for our learning purposes today, I'm going to do that for us. I'm going to come in here, I'm going to change the input to 200. And I'm going to change it so that we can see it, because I don't like dark blue on a dark background. It's hard to see. And there is the alleged death cross. Dum, bum, bum. So what you're seeing is the 50-period moving average is dropping below the 200-period moving average, and that in the world of technical analysis and in financial markets is considered a death cross. Now, I just explained it to you. All of you understand it. Is it important? If you listen to the news headlines, you would say it is the scariest thing that you could possibly see in the market. And I want to tell you it is not the scariest thing. In fact, it is one of the least scary things. Statistically speaking, whenever you hear people talk about a death cross, you hear about all this stuff, you usually hear about the Dow Jones Industrial Average or the NASDAQ or the S&P. When you hear about it, what you need to know is statistically speaking, more often than not, it's the bottom of the market. Not the beginning of a bear market. It's the bottom. That is the actual truth. What I'm telling you is a statistical fact. More often than not, if you were to average out all the times the death crosses happened, the 50 period has crossed the 200 period across all of the markets, and especially on the major indices, what you would find is, despite what the media tells you, this usually happens near the bottom, not the top. The only time it happens near the top is when you're deep in a bear market recession. That's the only time. And it happens so late that you can't do anything about it. It's a completely impractical warning signal. There, I debunked it. But what is practical? And what I want to share with you is what is practical. And I use this signal all the time. I just don't use it the way that the news media would want you to use it. I use it in a context of two different moving averages. And I use it, and here's the better death cross. You ready? I use the 10 period crossing the 50 period moving average. And I'll write those numbers up here for you. 10 moving average and the 50 moving average. And I use these so religiously that I created a special indicator inside TradingView, and I shade it green and red. And what you're going to notice is when it's red, it's bearish. And when it's green, it's bullish. And you'll notice if you look at my charts on this, you will notice that it's frequent. It works. This isn't like random. It works. When these guys cross, things are getting wonky. And whenever we're above the averages and they're green, that's a sign that this is a good, healthy trend. And when we're below the averages and they're red, it's a sign that things are in trouble. And you can go back and you can look at this. And Temple was asking yesterday, she was asking, how do you know? How do you know to get out of a trade? How do you know when to buy a trade? Well, I'm going to tell you, last November, I gave buying signals on XRP right here when we were back above the averages and the averages had turned green. Now, your averages, if you don't have it set up this way, they're not going to look green, but we created, like I say, it's just a moving average indicator. It's all we did. We just shaded the difference between them so you can see when it's red or when it's green. This is, we'll call that a life cross, because when it's crossing up, it shows signs of life. And when it crosses down and it's red, we'll call that the death cross because things are going down. But it doesn't mean that it's the end of the world. It just means that that trend is moving down in that moment. And if you just take these signals, and I got to change this key command because I keep hitting the wrong one over and over. If you just take these signals and you were to buy when it's green and you were to get out when it starts dropping below and it's turning red, and you were to avoid when it's red, if you just stay out when it's red and you just buy when it's green, over time you're going to make money. That's the easiest signal in the world. So I don't know if Temple's here today, but she'll probably watch the recording. And that's the answer for you, Temple. And I'll teach more about the analysis part later at a different time. But that is the simplest way I can address it for you. And I thought it was so appropriate that this was the headline on Yahoo Finance yesterday about XRP. We're approaching a death cross. Well, actually, we're not. Well, we are, but it just doesn't matter. Like the 50 over the 200 doesn't matter. So I think that's useful information. You guys can decide what you think. Here, I'll apply it to other cryptos. What would you like to see? You want to see Bitcoin? Well, you'll notice that we're below. So right now is not a time to be buying Bitcoin. Now, of course, I have also shared with you my support and resistance. This is part of my 5-step of analysis that I teach. So we're at or near a bottom. This is the worst time to sell. When you're out of support, that's the worst time to be selling. But what would have been really useful would be selling up here at 115,000 when we're dropping down and it's turning red. That's what becomes very useful. Okay. So all of them are going to look a little bit like this right now because we've been in the middle of a pullback. But part of what I'm trying to show you is we've got signals to get in at the right time. We got signals to get out at the right time. And we also have signals to know when it's gone as far as it's going to go. So this is right now is when people are starting to panic about crypto. They're starting to panic that XRP's gone so far. They're starting to panic that Bitcoin's gone so far. This is actually the worst time to be selling. The time to be selling is when the bear trend started, when the pullback started. That's when we should be selling. And this is the time to be hodling through this. Unfortunately, it's painful, but you got to hold through it to see where we're going. And once we start to move higher again, that's when you start buying again. Okay. I think that's useful information. I'm curious what you guys think. You can share it with me down in your chat. All right. Moving right along. We talked about the death cross. Get that one out of here. Bitcoin price today falls to 100,000 as valuation concerns deepen. Sorry, I can't read. Valuation concerns bring deep weekly losses. Dyslexia kicks in usually whenever I'm live. So what about this one? I told you I was going to highlight the term valuation. What's a crypto worth? What's a stock worth? What's anything worth? And the answer is it's worth what someone is willing to pay for it. And that's all it's worth. So when we look at Bitcoin and people start asking the dreaded valuation question, how do I want to annotate this? Is it worth it? Is it worth it right here? The answer is maybe. Who's to decide, right? There is no standard of what it should be worth. This is one of the frustrations that, especially as I work with crypto traders, I feel like we've got to re-educate. There is to have this idea that it should be X, fill in the blank. You're literally trying to chase the wind. There is no should in valuation. That is an argument that economists will try to make. It's an argument that some people will try to make through various economic calculations and try to say this is what it should be. But who's to say? Their numbers are all over the place, and I can make anything say anything I want. I mean, that's just the reality. And I'm not trying to, poo-poo on anything here. I'm just trying to bring your awareness to the reality that this headline is misleading. What this headline suggests is there's a number that it should be worth. But I'm telling you, there's not a number. It should be worth whatever someone's willing to pay for it. And a few weeks ago, we had a miraculous opportunity or miraculous time where people thought Bitcoin should be worth 123,000. And right now, what the free market is telling us is Bitcoin's only worth about 100,000. That's actually not good. It's not bad. It's neither. It's just the data at the time. And if I can relate this to something, I'll relate it to, maybe buying an automobile or buying a home. Let's say that you have an automobile. We'll call it a $10,000 vehicle. It's a minivan. Why is it a minivan? I don't know. I just think it's a minivan. You got a $10,000 minivan and you're trying to sell it. And let's say you have 5 or 6 buyers lined up and there's no other minivans available. Well, one of those buyers is going to say, you know what, I'll pay $11,000 for it. So that moment, that minivan was worth $11,000 to the free market. Now, fast forward a little bit. Maybe there's 3 or 4 minivans and there's only 5 buyers. Maybe there's 2 buyers and 3 minivans. And, you know, maybe everybody's priced their minivan at $10,000, but you only got 2 buyers. So one of the sellers says, you know what, I'll drop mine down. I'll sell mine for $9,000. And boom, one of the buyers says it's sold. I'll take it at $9,000. That's what happens in the market. That's exactly what's happening in the market all the time. I don't actually know if I can pull this up. I'm going to try something here. I do not know if I can pull this up on TradingView for crypto. Let's see if they'll pull it up. Well, they only give us one price. I just pulled up something in the chart here. Again, this is in TradingView. This is called a depth of market. Now, you're not seeing the full book, okay? But what you're seeing in here is all these prices. And you can see there's a number that's coming in here, and some of them are higher than others. What you're seeing on the right side is this is called the ask price. That's the higher price that people are saying, will you pay me this much? And on the other side, on the bid side, this is the price that people are saying, I'm willing to pay that much. Now, when you have a full depth of market, and we don't have it here, and you have a book, an order book, okay, which you would see, you know, if we had a data feed from Coinbase or from, you know, a lot of different centralized exchanges, you'll have an order book, and you'll have all these orders stacked up, and at a higher price, some people are willing to sell. And at a lower price, some people have put an order in there, say, I'm willing to buy at this price. What the market maker does, the person, in this case, it's electronic, but you know, the group that's matching the buyers and sellers, they're constantly moving price up to match the higher or the lower price that people are willing to buy or sell at. That's why price fluctuation happens. It's not because the value is worth less. That's what the free market was willing to buy it for at that time. And in terms of crypto tokenomics, that's the term we use. It's kind of the economics of tokens. In terms of crypto tokenomics, there's a lot of things that can change what the actual printed price is. But at the end of the day, if it's a free market, if it's a freely traded market, it is going to have price fluctuation based on the core principles of supply and demand. What are people willing to buy and sell for? But here's a misnomer I want to share with you guys. One of the things people say is, well, nobody was buying today, everybody was selling. And that's why price is going down. That is not a true statement. When there is a price that is printed on the ticker tape, and that's what you see on these price charts here. When there's a price that's printed, somebody transacted. That means there was both a buyer and a seller. And when we talk about the exchange, that's their job. Their job is to match the buyer and the seller. So when you see a printed price, and it's kind of hard to see probably over a live stream, but right now, the printed price for Bitcoin is 102,731. And it's changing, but that's the printed price for Bitcoin right now. That means that in that moment, a buyer and a seller agreed that was the price that they would buy and sell at. Just like in my example of the minivans. So if you have more buyers and you have fewer sellers, then what's going to happen? The buyers say, I'll bid the price up until they attract a seller. And then once that sell transaction happens, what happens? You got some buyers over here, and some of them are saying, well, I'm not willing to pay that much, and others are willing to raise their bid, and that's how price action moves. But the actual price action that you see on the screen, all it's saying is we've matched a buyer and a seller at that price. And understanding that changes everything for you. Because when we come over to something like XRP, and we talked about this just a moment ago, when we come over to something like XRP and we're looking at this price and we're saying, well, it was 215, 221 yesterday at the end of the market, and today it's 230. Price is going up. This is a good day, right? Well, what it really means is there's more buyers that are coming in that are willing to raise their bid. That's all it means. It doesn't mean that XRP is worth 230. It doesn't mean that it's not worth 230. It means that this is in the moment what the free market agrees is a fair market price. That's all it means. And so when we look at crypto, and we're going to get into this a little bit deeper, when we look at crypto, we try to answer the question, what should it trade at? What should it trade at? And that's the question I get from so many people, especially with XRP, especially with Bitcoin. They say, well, how much do you think it should be at? It's the wrong question. What should it be? Should XRP be $10 a token? If it attracted enough market cap to get there, sure. But right now, the market cap for XRP is $140 billion. To get to $10, we got to multiply that to basically $1 trillion, close to $1 trillion. Can we attract $1 trillion worth of capital into XRP to drive the price to $10? That remains to be seen. Is that what XRP is worth? If the free market decides so, yes. And this is such a hard concept for people to understand if they don't understand the economics of a free market. If I got a laundromat down the street and I'm looking to sell it, the fundamental value matters. I mean, we need to know how many people are coming in doing loads of laundry. We need to know what our cost of doing business is. And if I'm looking to buy that laundromat, every one of those numbers that we would call a fundamental value, it really matters in the valuation of the company and what we're going to sell it for or what we're going to buy it for. When you're in the free market, it don't matter. You got to like put that onto a sticky. When you have that thought in your mind, what should it be worth? The answer is, it don't matter. It should be whatever somebody's willing to pay for it. That is the actual answer of what the crypto is going to be worth. And so if the market is only willing to pay $2.30 a token for XRP today, that's what it's worth today. That's what it's going to be worth. Is it right or wrong? It doesn't matter. That's what it is. And the sooner that you can understand that, the sooner you can, kind of dissociate from this idea that there should be a value. And now we move into the trader's perspective, which is, where's the trend going? Where's the price boundaries? Where does the sentiment go? And I'll teach you more about this as we go a little bit deeper, but I'm just kind of setting the stage to help you understand how I think about price action and why I don't get all tangled up into these questions of what should XRP be worth? What should Bitcoin be worth? I don't know if Bitcoin should be worth $150,000. I'm going to be honest. I don't know if it should be worth that. I think the sentiment is going to take us there. I genuinely think that. But I don't know that it should be. I don't know that it should not be. I'm just saying that from a value standpoint, we can't put that number on it. All we can put the number on is where is society? Where's the free market taking it? And right now, what society is doing, what the free market's doing, you're seeing it. What the free market is doing right now is it's been consolidating the price action of Bitcoin and all crypto. This is what we talked about yesterday, but it's consolidating that. That means the buyers and sellers are shaking it out. They're figuring it all out. And as they figure that out, eventually you'll see a new wave of either buying pressure or selling pressure, and the whole cycle starts over again. Okay? So I think that I know after 16 years of doing this, well, trading for 22, but I know that this is important. I think from your standpoint, if you want to understand crypto, this is probably a very important conversation for you to really capture and understand. But we'll dig deeper into that moving forward. The last headline I want to talk about today is this one right here. Why is Bitcoin down today? What's the next big thing? And the part I want to focus on is that right there. That's the question that people ask. Why? Why did it go down? And I actually just answered that for you. I gave you the answer before we got to the headline. It went down because that's what the free market said needed to happen. That's it. It's not good. It's not bad. It's just what happened. And you're going to see this across the board. And again, as soon as you can dissociate this idea in your mind that it should be worth something, that's the moment that you've become a trader. That's the moment that you can start to invest from a healthy perspective as opposed to a buy and hope, or we're just going to hold on for dear life. We're going to hodl. Why? Why are we going to hodl? Because somebody on the internet said this is going to be $100 a token? Because somebody on YouTube's out there pumping it? Let's move away from that idea and let's move over to real value, real demand. And when we can find a token that has real demand, you end up with situations like Dogecoin, where Dogecoin, which was a completely worthless token, had absolutely no substance at all. And people became Dogecoin multimillionaires because of the demand. That is the key to crypto price action. Where can we create demand? That's the reason you see so many people out there saying, oh, to the moon, XRP, $5,000, all these different numbers, and then it crashes, and it's the low-level people who didn't understand price action who are asking why. They're the ones that ask the question on this headline, why is it down today? Because you were part of the herd that was following. And what we want to do is we want to flip it. We want you to not be part of the herd. We want you to be part of the educated inside crowd, the people who understand the price action. All right. There you go. That's my explanation of price action for today, mixed in with headlines. Give me your thoughts. What do you think? What do you think XRP should be worth? Anybody who says anything other than what someone's willing to pay for it, you're wrong. All right, let me check our comments here. Do comments post now? Let's try this. Nope, they're still not posting. I wonder why they worked last night and they don't work today. Because it's technology. We got a couple comments over here. Thank you, Aaron. Appreciate that over on YouTube. So we've got a handful watching over there. We still have the biggest number at Rumble, which I think is great. I do love Rumble. I genuinely love Rumble. All right, the next thing that we are going to move into today, we have looked at some market analysis. We've looked at market updates. We've looked at some headlines. It is time. I need like a transition. It is time for our core lesson of the day. So we need like a make it a cool show, right? Today, I want to get into the idea of what is blockchain? Like, where's this stuff come from? What's the language even mean? And I remember when I was learning crypto for the first time, I was so stuck on this. I literally could not move. I was like, I don't get it. And then I found an explanation and I was like, I get it. So I'm going to give you the explanation. All right, so here's how it works. What is blockchain? Blockchain, the first thing you need to know, blockchain is the core technology of crypto. When we talk about cryptocurrency is the coin or the token that runs on the blockchain. But the blockchain is the technology. I shared with you yesterday when we look at what problem does a specific crypto solve, we said that Bitcoin proved the blockchain. That was the thing that made Bitcoin so unique, is it showed that we could have a peer-to-peer transaction and it could be recorded in this blockchain and nobody could change it. And it was 100% transparent. It was 100% verifiable. And it changed us. We just didn't know it was changing us yet. Currency is the word that gets us out of this idea that it's a technology and it moves us into this idea that it's a money. And we talked about that yesterday. Currency is a deceptive word. Crypto, the token, is the little piece of information that's moving along the blockchain. But blockchain is the technology. It's the core. And once you understand that, you realize, oh, I'm not buying and selling a currency. I'm buying and selling parts of a technology. First thing you need to understand about blockchain is it's decentralized. What does that mean? It means it doesn't go through a central authority. It's separated. If we think about centralization, I want to talk about this for a minute. The U.S. government, if it was run the way that it should be run, would be like Bitcoin. We have three components of the U.S. government. We have the executive, we have the judiciary, and we have Congress, the lawmakers, right? And in a perfect world, they would all agree and they would make a decision, they would come to a consensus, and they would do it. Okay, that would be ideal. That's not how it works, though. The way the central government's gotten set up is they are the central authority, and you got some people who've taken it over, and they kind of impose their will and they manipulate everything. And now this central authority called the government, they can pretty much do to the rest of the people anything they want. That's why as libertarians, like, we're all against all of that, right? Because we want decentralization. But in the original form, if you think about the U.S. government as it was supposed to be, it really was a primitive model for what we know today as blockchain. It was a decentralized government. The federal government was not supposed to be central. It was supposed to be representative of all the 50 states. And each of the 50 states weren't even supposed to be central. They were supposed to be representative of all the little counties inside the states. When we look at a decentralized model, we distribute all of the power across the entire grid. That's the idea of decentralization. Now, if you compare that to the central bank, what does the Federal Reserve have? They have the ultimate authority for all the banking system in the United States. They are the central, singular authority. That's the idea of centralization versus decentralized. So when we use the term decentralized, which again, when you're learning blockchain, it's kind of new language. We don't talk about this stuff a lot. The core technology is blockchain. The core philosophy is decentralization. Everything is distributed across everything. What you need to know about blockchain is it's secure. You need to know that it's transparent. Every blockchain has an explorer. That's what they call it. You can go into the chain explorer. You can see where the transactions went. You can actually see this wallet address transferred this amount of the token to this other wallet address. It's there for anybody to see. It might take a little bit of research. It might take a little forensic work, but it's all there. So let me break it down into how does this apply and how did this all transpire? Imagine you got Bobby here. Bobby's got some dollars. And Bobby wants to give his dollars to Billy. In the old world of paper currency, he just gives his dollars to Billy, and Billy's like, thanks, Bobby. And you didn't need anybody in the middle. This is peer-to-peer. Bobby is a peer of Billy. If you don't use the language peer in your day-to-day life, friend to friend, person to person, peer to peer. Person to person, Bobby can give his dollars to Billy. And for all those years, it worked really, really well. Because when you looked at the value of the dollar, it was tied to something, and that was a value of exchange. And it was a really easy way to say, here, I'm going to give you this value in exchange for what you're giving me. And if Bobby screwed Billy, Billy would beat Bobby up. And if Billy screwed Bobby, Bobby would beat Billy up. And you can understand how it all went. Pretty simple. It's the way it should be. It's the way it should be. But what happened? Well, after a while, people were like, I don't have exact change. Can you make change? Billy's like, I don't have the change for it either. And well, can I just write you I got the money, can I just write you a piece of paper with the exact amount and you just take it over here and they'll give you the exact amount. I put it in the bank. And we call that a check. Now it sounds great. Bobby can give Billy a check, but Billy's got to do something with the check. He's got to go to the central authority and say, I need to get this money from Bobby's account. Bobby gives his money over to the account, to the central authority. Billy, he goes to the central authority and he wants to take it. Now, this is the way it works for checks, for credit cards, for money orders, for any other form of cash. You have to go through the central authority. And what that bank does is they become the third party who says to Billy, yep, Bobby's check worked. Bobby's check, turns out he had the money in the bank account. And for Bobby, they become the holding point. And they're like, yeah, we're going to hold your funds. Billy can come get it. You can spend out here. And they are a central location where Bobby and Billy can go to get the money. The evolution of money. Well, centralization works until corruption happens, right? That's the problem with a third party centralized party. Is first and foremost corruption. And I know you and I both would never do that, but apparently in this world of around 7 billion people, a lot of people, especially when it deals with money, are rather corrupt. They don't do what they say they're going to do. And when you're in the middle, you're the middleman, you're the central person, and you're dealing with both sides of it, it becomes very tempting. And corruption tends to take over. And I don't know why it happens. It's human nature. It just happens. And so the problem that we're looking at is how can we transfer value from person A to person B without dealing with the third party fallacies? Third parties are corrupt. Third parties want to get paid. They're going to take a percentage of everything. I don't know if you know this or not. Do you realize every time you swipe your credit card, the merchant has to pay 3%? You never think about that. You don't think about the fact that when you go to the grocery store and you buy your groceries, that grocer has to pay 3% of every transaction to Visa or MasterCard or a central third party who facilitated that credit card transaction. As a business owner, I'm very aware of that. Some of you are business owners and you're aware of this as well. But as a business owner, it's part of our cost of doing business. Every one of the transactions. If I charge somebody $1,000, I never see $1,000. 3% comes off the top the second that credit card is processed. It's the way that the central party set it up. And it's costly. Does it really cost 3%? No, it doesn't cost that. That's what Visa and MasterCard wanted to make. It's an old system in a digital age. And so what we needed is we need a new way that we can transfer dollars from Bobby to Billy digitally and minimize or exclude the third party. Enter Bitcoin. What did Bitcoin do? Bitcoin created a new way that without having a centralized corrupt party, we could transfer value from Bobby to Billy. So Bobby says, I need to send Billy a little bit of value, and we'll go with round numbers. We'll say it's 1 Bitcoin. Okay, he probably didn't send 1 Bitcoin for a Dr. Pepper, but maybe it was a really valuable Dr. Pepper. If it was the last one, would I pay $100,000 for a Dr. Pepper? I might. I like Dr. Pepper. But, fortunately, we've got more than one. So it doesn't cost $100,000. But for this example, we're going to say that Bobby's transferring a Bitcoin to Billy. Okay? Now, he's transferred it. Great. It's just like transferring a check. He hands it to him. Now Billy's got to say, wait a second. You handed it to me peer-to-peer, person-to-person. How do I know that this Bitcoin is exactly what you told me it was going to be? That's where we need the validation. Now, if you go back to the old model of checks, what happened? Bobby could pay Billy peer-to-peer, but Billy had to go to the bank to get it out. This is similar but different. What Bobby is doing is he's moving value from Bobby to Billy's wallet in the form of Bitcoin. Now all Billy needs is validation that this is a real Bitcoin. Validation that it's real, that it's not a hijacked Bitcoin, it's not a fake Bitcoin, it's not a simulated Bitcoin. It's a real Bitcoin. So where do we do that? We do that through the network. So instead of going straight to Billy, it goes straight to the Bitcoin blockchain system. And in the middle here, what happens is 1, 2, 3 different computers, all operating on their own, validate Bobby's address, Billy's address. Bobby's got what he said. Billy's got what he said. Check. Computer 1 does it. Computer 2 does it. Computer 3 does it. Whenever they do that, they talk to each other and they say, you did it. Yep, you did it. Yep, you did it. Okay, we all agree. Checks and balances, the way it should be. We're going to transfer that Bitcoin over to Billy. And when we do that, it gets marked down in the accounting ledger. Now, what is the accounting ledger? It is called the master ledger. This is where everything happens. And on that ledger, without you being able to see it, somewhere in here is a wallet address with Bobby's name attached to it. And what the computers did is in the ledger, they went in and they said, where's that wallet address on the ledger? Does it have enough Bitcoin to transfer to Billy? It does. Take it from Bobby's wallet. We're going to move it to Billy's wallet. Boom. Validated. Done. Mark it. Okay, it's locked into the ledger. Just like what your bank would do, but we didn't have to go down to the bank. We didn't have to talk to Tammy the teller. We didn't have to deal with any corruption. There is a little bit of processing. And that processing is a reward or a fee that is paid to these three computers. That process that I just talked about in the world of crypto is what we call mining. The reward that they get is their reward for processing, proving, validating that the transaction happened. And when they do enough of those transactions, this little ledger gets filled up and they get their reward. But it's not one person, it's decentralized, it's secure. There's three people validating it. And it's transparent. We can see, not only can we see the wallet address that Bobby moved the money from over to Billy and his wallet address, we can even see the computers that validated and said, this really happened. And there's no person, there's no corruption, there's no central third party. It's all decentralized. You don't have any idea which computer is going to validate it. They don't know who you are. You don't know who they are. It's completely decentralized and yet completely transparent and locked down. And once it's done, it's locked in the ledger, transaction complete, irreversible, no undo. And when that ledger gets filled up, guess what happens? It's locked up. And when that ledger is locked, the reward is paid. We call that your mining reward. And that ledger is called a block. What happens next? We open up a new ledger, a new block, and we link them together, and that is called the chain. And we continue putting transactions. And when that ledger gets filled up, what do you think happens? It gets locked up. The block is closed because we turned the page. We turned the page. The page is full. We lock that one and we link up a new one. And that, ladies and gentlemen, is what a blockchain is. A blockchain is nothing more than blocks of data that is ledger data that is validating the transactions from Bobby to Billy, validated through these three computers. That's it. That is it. Blockchain. Might sound simple, might even sound kind of dumb. The people who don't get it, you might be like, well, I don't even know why that's important. But if you can realize that all of this is happening automatically without Tammy the teller, without Tim the manager, without any of the people at the bank, with no Chase, no JP Morgan, I guess that is Chase, no Bank of America getting in the middle of it, no Federal Reserve getting in the middle of it. It all happened. And it worked. And that's why Bitcoin changed the world. Because they proved that it could work. I'm not saying Bitcoin's a good currency. It's actually slow and it's expensive, relatively speaking. Somebody wrote in the chat here that, hey, Bobby, XRP is nearly free. Yeah, you're right. XRP is faster and more efficient. But Bitcoin proved it. And it's more scarce for what it's worth. But Bitcoin proved it. That's why it mattered. Now, you talk about the different blockchains, and you look at Ethereum, it's got its own blockchain. You look at Solana, it's got its own blockchain. XRP, they have their own blockchain. Some of them have a different process. Okay, so this is called proof of work. And you get the mining reward by doing the work of validating the transactions. But there's other ways to get rewards. Not every blockchain pays rewards for validating transactions. Some of them don't decentralize the validation. There's different ways that it works. Okay, but I'm just teaching the principle. This is what blockchain is. And this is how Bitcoin works. And here's why it worked with currency and why this is where it started. As I said yesterday, currency, if you think of crypto and you think of blockchain as only currency, you're really selling yourself short. You're selling the technology short. Because understanding this blockchain idea, I'm going to have to go back through my slide builds, but imagine that we're not moving money. Imagine that accounting ledger is instead the closing of a house. What? Could we actually do a business transaction with all of the money moved and the confirmation of the details of the business transaction stuff that, you would take an attorney and, everybody at the closing office or whatever transaction you're doing? Can we do a transaction and have it all validated in this ecosystem without having humans involved? And the answer is yes. It started with Bitcoin, but Ethereum proved that we can do it for other transactions. And they call that smart contracts. And you're starting to see like, well, could we do insurance policies through blockchain? And the answer is yes. Could we do medical records through blockchain? And the answer is yes. Could we do voting through blockchain and have zero human interaction and zero corruption? And the answer is yes. And have it all transparent? The answer is yes. Once you understand that crypto is not about money, it's about the technology. That's when your mind goes, whoa, yes, they can all exist. Yes, we can have 50,000 different cryptos because they can all serve a different purpose. We're not going to have one crypto that replaces all the money. That's naive. That's not going to happen. What we can have, though, is we can have unlimited crypto projects that serve society. And they start to automate things that centralized third parties corrupted. As a currency, let's think through this, and I'll wrap this section up. As a currency, it is a natural evolution of money, and it's the place where it should have started. I mean, we're not going to start rewriting contracts with blockchain. That was a complicated place to start. Money is the most basic transaction we can have. You need a fungible thing that you can transfer between two parties to recommend or to suggest a movement of value, right? That's all money is. So it was a simple idea. So it became cryptocurrency because it was simple. And it's a natural evolution of money, but there's so much more to it. If we think back to gold as a standard, gold is nice, but there's a problem with gold. What's the problem with gold? Number one, it's heavy. Have you ever tried walking around with ounces and ounces and ounces of gold? I mean, have you ever tried running with pennies in your pocket like your jeans are falling down? Imagine doing that with your entire net worth of gold. So what did people do? They say, well, I need somewhere else to store it. Well, I don't want to store it at my house. Somebody could break in and steal it. So what do? They took it to the bank. But then it became kind of difficult to always go back and forth to the bank to like get some gold. So the bank issued paper. And what did the paper do? It said, we're backed by gold. This guy has $100, or this girl has $100 worth of gold in the bank. And then one day they took the currency off of the gold standard. So people were so confused, though, they continued to buy and sell with these now fiat currency, fiat dollars. Many people thought it was still backed by gold, and it wasn't. But now it had established a value. I asked a question earlier in this presentation, what is the value of something? Economists are stuck on what's the value of it. People are right now saying, what's the value of the dollar? It's collapsed. It is collapsing. What if the dollar collapses? It only collapses if the faith of the people stop believing in it. What's it worth? Whatever people think it's worth. That's it. That's it. It's only worth what people think it's worth. So we traded dollars for gold. Traded gold for dollars. Then people said, well, I need better denominations, so we created the check. So we could write a specific denomination. That became a little difficult. Money moved over to this idea of the digital credit card, where it would just swipe it and it went through your bank account. Everybody thought that was pretty cool, and it was pretty cool. Then we realized how corrupt that could be. Enter crypto. Crypto allows two parties to transfer value between two parties with a decentralized network. Keep a perfect record of it without involving a centralized corrupt party. It's the natural evolution of money. That, ladies and gentlemen, is what blockchain is. And that is where we're going. This is changing everything. This term that I've just laid out for you, this concept of blockchain and decentralized money, leads to decentralized finance. Imagine that we trade, you guys may or may not realize this. Do you realize when you trade a stock, there's a centralized third party called the New York Stock Exchange? What happens? New York Stock Exchange takes away the counterparty risk. They take away the risk that Bobby and Billy might screw each other. Instead, the New York Stock Exchange says, I'm going to be the centralized party, and I'm going to deal with Bobby, I'll deal with Billy, and I'll make sure you get your stock. And what does the exchange do? They take a little piece right in the middle. What if we could transact a stock transaction without the New York Stock Exchange, without human market makers? Oh, we can. That's what a decentralized crypto exchange does. A decentralized crypto exchange like 1inch. What do? Like Uniswap. They create an exchange where a buyer and a seller can meet up, and they have an automated market maker that matches a buyer and a seller, and it facilitates the transaction. In this case, it's a crypto from person A to person B. Boom, it happened. No centralized third party. The technology's here. Completely decentralized finance from top to bottom. Banking to trading to investing, real estate. The technology is here. And when you're dealing with crypto, that, ladies and gentlemen, is what we're dealing with. That's why I say we're right at the beginning. We're right at the beginning. If you wonder if crypto's saturated, if you wonder if we're too late in the cycle, look around and ask yourself, has the entire banking system moved to DeFi? No. Has the entire stock market exchange and options exchange and all the derivative exchanges, have they all moved to DeFi? The answer is no. Have all real estate transactions moved to DeFi? The answer is no. Have all business transactions moved to DeFi? The answer is no. We are so early in the curve. We are just at the beginning. This is a 100-year cycle. That's why this is so cool. That's why people need to be loading up on crypto. That's why you need to learn this stuff, because this is a transition. We are in the middle of a transition. But the next 5 to 10 years, you're going to start to see all of that just completely infiltrating all those markets that I just mentioned, as well as more, even more than what I just mentioned. And that's why the opportunity is so big. All right, what questions do we have as we wrap up today? What questions do we have? You are welcome, Miss Aaron. Thank you for that comment. I wish I could share these comments. I'll try it again. But of course, they're not sharing. The box is there. I don't know. Must have messed something up. Danny Boy says, Bobby is not shipping $102,000 for a soda. What the F is this guy talking about? XRP. Well, Danny Boy, I can see you didn't catch my drift. It was a joke. And I can tell you're shilling XRP. I'm fine with XRP. I got nothing against it. Just using an example. Thank you. A great explanation of the purpose of blockchain, keeping it simple. Bitcoin is not a mover of money. Did I upset you, Danny Boy? I'm so sorry. I don't know. I'm not sure how I upset you, but you feel a little hostile. A little hostile. AMC and GameStop. Yep. Danny says, Sean Mel. Wow, Sean even brought you into this. Traders and scalpers are scum. Buy and hold the line. Danny's an angry elf today. Sorry, Danny. All right. But appreciate the commentary. Appreciate it. Well, ladies and gentlemen, that's what we got for you today. If you got any questions, comments, add them in. And I will be here Monday. We're not going to do shows on Saturday and Sunday. But Monday, we'll be back 2 o'clock Eastern Time, 1 o'clock Central, 12 o'clock in the mountains. And if you're over on the West Coast, it's 11 o'clock. As we continue building blockchains and learning some of these basics of what crypto is and how blockchain technology works. Give me your feedback. Let me know what you want to see. If you got some topics you want me to cover, let me know, and I will work them into the show schedule. Until then, I wish you the best. Thanks for being here. I will see you Monday. Happy trading to all of you. Have a great weekend. We'll talk to you soon.